Bitcoin on Wednesday hit a new all-time high of more than 66,000
Now
US
it's starting
dollars.
to actually gain some
If
traction.
you're stupid enough to buy it, you'll pay the price for it one day.
It has quintupled in value over the last year.
Elon Musk makes one of his riskiest bets ever.
Money is just a number in a database.
We're talking about a decentralized
world. The supply of dollars can never be sufficient to satisfy the debts that it creates.
Joe Biden's government could be mining Bitcoin. We have Square rebranding to Block to shift its focus, and studies show record numbers of Bitcoin users. Welcome to All Time High Crypto Podcast. I'm your host, David Vader, and my co-host, Swerty. How you doing, man?
Great, as always. And of course, it's another tumultuous week in crypto, of course, with the price of Bitcoin effectively dropping $10,000 in 10 minutes.
That was pretty spectacular to watch. And of course, we had people of the likes of Nayib Bukele, the president of El Salvador, buying the dip, along with a whole bunch of other people. And now it's starting to return in price. But of course, it's hard to tell where things will end up. We'll have to wait and see.
Of course, it's a speculative asset at the moment. So it's always going to be experiencing these kind of price movements. I mean, relatively, it's not even that far out of the scope of what's, I guess, accepted in the crypto world. This happens quite often. We do see large price drops and then movements. Of course, a lot of the price predictions for December, I don't think will be coming true at this stage.
Yeah, that's of course. We've got a lot of Bitcoin maximalists talking about 100K this year. Maybe that's a little out of the way. Let's jump into the first article here. We have the Fed Chairman Jerome Powell warning Congress that inflation is going to keep rising next year. Of course, you and I have been talking about inflation the whole start of this podcast and how it's going to be consistently rising and how it's going to be very, very difficult for any central banking agency or government to start tapering or to start controlling inflation. And, it's no different. What was once transitory is now here to stay. It's at least moving into next year.
It's interesting how they removed that word from being a transitory thing, and now they're classifying it as, well, yeah, no, it is here to stay. And we're going to do what we can to ameliorate the effects of this. But essentially, you can't print your way out of inflation. No, I don't think there's a country that's ever been able to do that, not for a sustained amount of time. And that's a really important thing when you're considering hedges against inflation, such as Bitcoin. And really what I think we're going to see is the US are going to be trying to stimulate the economy. They're in a, like we've talked about, they're in a really lucky position, essentially being the world's Federal Reserve. But a lot of currencies are defaulting, a lot of countries are defaulting on their loans and the bonds that they have gone into terms with America on. So yeah, next year is going to be really interesting for how that pans out for them.
Yeah, absolutely. I mean, it's like trying to fix a leaky boat by punching a few extra holes in it.
Yeah.
With the way money printing is going. But you're right. The US is in a very unique position. If they're the ones that can pull off a magical move, they're going to be the only ones that are able to do it.
Yeah, well, I mean, we're looking at as well, Germany's inflation has surged past 6%. So the European Central Bank insists this is just a spike. And of course,
where have we heard that before?
Yeah, it was funny how we seem to hear this continually after a huge amount of money gets printed. But of course, inflation does rise and fall. It's also interesting to see how economists crunch the numbers to show how inflation is actually working within an economy. You were talking about that last episode where the actual inflation numbers are generally higher. And you and I were discussing that, like day-to-day purchases. When you remember, oh yeah, how much was that thing when I bought it last year or the year before? And
yeah,
as these costs rise against a stagnant wage or even wages that aren't quite matching inflation or the rate at which these prices are going up, you'll feel the inflation more than you'll see it on paper. You're going to feel that the money's just not going as far as it can, which is why we tie these two things in all the time with Bitcoin. In the Bitcoin Standard, he talks about how Bitcoin actually becomes a hedge against inflation. And the way that works is because it's effectively a deflationary asset, which means once the supply of Bitcoin has been mined, or most of it is mined and people aren't actually trading it and they're holding it as a store of value, that's when we'll see the price really start rising.
That's right. I mean, one great thing about Bitcoin is that it's the amount that the money pool inflates is preset. So there's no shocks to the market. Whereas if you have a central bank authority or even something like a gold standard, although gold standard is much closer to optimal than fiat, you have shocks to the market because the market doesn't know how much money is being printed. It doesn't understand how the actual pool, how much the pool is inflating by. But you know what? People are wisening up. People are moving on. And I think real leaders are coming forward and stepping into the space and saying, you know what, we're changing our focus. And that's exactly what Square did by rebranding their entire business to Block. They put up a tweet about this, the reasons behind it. Obviously, the biggest one that's relevant to our show is that it's, Block is blockchain. But they also talked about how, Square is a payment part, the payment side of their business is for everyone around the block. And they went into detail about all the other ways that you can apply this name. But of course, Block to me signals very clear new focus for Square. And of course, Jack Dorsey leads it by saying, we want to be part of this blockchain space and we want to be a leader in it.
Yeah, I think it's a really smart move. Of course, Dorsey's quite a maximalist himself. He's very much behind Bitcoin, and aligning yourself with where the world's going with blockchain. Again, early adopters, they get most of the cream off the top, and Block is putting themselves in a perfect position to be able to reward themselves with all of that first mover kind of opportunities that they're going to be getting. And of course, the SEC chairman, Gary Gensler, is talking about how Bitcoin is now competing with the US banking system. And essentially, one of the issues with the banking system is it's quite convoluted. Foreign exchange loses somewhere in, or it costs somewhere in the realm of like $5 trillion per day, but with interest rates and exchange rates, moving large amounts of money between current countries. And one of the problems with that is when you have a system that it's an archaic system, essentially. Like the idea of this printing fiat currency has been around for, essentially we've been using it for the last solid 100 years. Give or take. And I mean, before that, there was a lot of systems which were similar, but the world really started integrating this once we sort of unshackled from the gold standard in the last 80 years or so. Things have really started heating up, and we're seeing the effects of inflation worldwide. And you're seeing a lot of countries, of course, we talked about that last few episodes where countries that the lira and so forth, their currencies have just been plummeting, and the value's been crashing against the inflation. And this is quite a serious issue around the world. And essentially this is boring for people if they're not interested in currencies, they're not interested in economics, and they sit at home and they're like, oh, I just want to, buy my things or whatever. But you have to understand, like with trade around the world, when you've got large countries like China and America and the European Union invested in trading with each other, and there's large costs involved and time, and countries are having some issues with inflation, other ones are having issues with trade agreements and exchange rates. This causes bottlenecks, it causes imbalances in the system, and it's really hard for people to actually trust when they put their money down the table when there's an exchange rate on Monday, that it's going to be the same by the time the deal is closed or whatever they might actually be planning for on the Wednesday or the Thursday or the Friday or the next year. And economies are slow. You can't just change an economy or a huge, even just large businesses. You can't just dump all your stocks or move a huge amount of whatever you might have, the assets. You can't just do this quickly. People don't understand. It can take months or years to set up these kind of transitions. And this is a major problem. So with something like Bitcoin, is highly efficient. It's not quite as fast. It can't handle the volume as well as a current system can. But the adoption rate and the amount of time and energy and efficiency that it's showing are huge green flags as a competitor to the banking system as it currently stands. And someone like the SEC chairman, Gary Gensler, standing up and saying this publicly is great news for Bitcoin. Yeah,
absolutely. I mean, it's like, as you pointed out, these sort of huge scale transactions, foreign exchange is not efficient. It's not the same as like you and me buying a pair of shoes maybe from the US and having it shipped to Melbourne. Maybe we've got to pay on our card in US dollars instead of Australian dollars. It's not the same as that. I mean, when it comes to large settlements, it's very, very inefficient. Of course, Bitcoin speeds that all up. Moving on to the next article here, we have Ross Albright, who we know, of course, is the founder of the Silk Road back in the OG days.
Naughty boy.
He went to prison. He's in prison for the remainder of his life. A lot of people saying that that's the government trying to make a
example
out of him. Thank you. Yeah. He's just come out and released a series of NFTs. There's a bit of uproar, I guess, from on one side of this, where they're saying, oh, now he's selling out. But of course, he needs to raise money for his attorney fees, and he's also donating a whole bunch of money that's going to be raised from these NFTs to other people. Sorry, an organization, I believe, a charity that helps the wrongfully convicted, which he believes that he is. freeross.org for info on that one.
Yeah, this is an interesting one because he's, of course, got the position of fame through what, you know, his notoriety of being part of the original Silk Road. And since then, of course, being in prison, he's then come across the idea of NFTs from other people, and he's created a series of NFTs. The idea of being able to profit off these, I don't believe he's actually able to keep any of the profits off of them. But like you mentioned, it's about raising awareness and trying to change his own life. And this would be, this would be part about him understanding where he is in life and why he is, you know, essentially in the position he is now. So I all the best for that. But I think there was an interesting thing that Raoul Pal talked about with NFTs, and just sort of going to sidetrack off of this a little bit. The entire market of NFTs at the moment is based a lot on hype and speculation. And I think people are kind of misinterpreting the value of what NFTs are. And that we're seeing a lot of these artworks created, and people are getting really excited about. Of course, we saw all of the apes and the different things that people have come up with, and huge prices being sold for essentially just like a pixelated digital image. Of course, there's a certificate behind that, and that's the code that the NFT represents, which is encrypted. And that's the thing that is the proof of purchase. It's like when you buy a coin and you have, you know, the signature, like, this is my proof. And if anyone watches Porn Stars or whatever, and they come in with like a special item and it has a certificate of proof which can be authenticated, and like, yep, this is a real thing. That's where you get the value from. The item itself, of course, is the valuable thing, but you kind of need that secondary proof. And Raoul Pal was talking about how the value of NFTs, the market right now, is kind of in that hype bubble, and potentially the market could lose 90% of its value just because everyone's piling in with their own NFTs. As we saw with Ross and so forth. And I am inclined to think that that's what's going to happen. But the true value of NFTs will actually progress into the smart contract side, and we'll see the art and music and all of the power that NFTs.
Yeah, of course.
But
things are changing a little bit, and you know, Raoul Pal, obviously a fucking genius, smart guy. But he's right. You know, people tend to invest too much in the short term when there's a technological change. They think it's going to be a bigger change than it actually is in the short term, and then in the long term, of course, they underestimate how big it is. So there lies the opportunities. When there's a big change like NFTs, this new technology, this interesting way of doing business digitally, people, you know, the hype train builds up, especially if money's involved. But I think over the next 1 to 2 to 5 years, that's going to be the time to really figure out how NFTs can be used in an investment portfolio. Because right now, sure, you could buy some art and it could get famous on Twitter, and then suddenly you've got, you know, a Bored Ape Yacht Club original that you can sell off for a lot more. But I think those opportunities are few and far between, and they're going to get more and more scarce. But keep your eyes on that NFT space, because it's not all just art, and there's going to be a lot of opportunities moving forward.
Similarly to art in the real world, there's only a few Banksys. There's only a few Da Vincis. Not every piece of art has intrinsic value for the market. I mean, all art is arguably valuable, but only a few become famously valuable. And that's, I think, what we're going to see. Talking of moving into technology step by step, Australia is seeing its first direct Bitcoin and Ethereum ETFs. They're going to be launching soon, and I'm quite excited about this. We have crypto Bitcoin and crypto Ethereum. They're going to be launched. The launch date isn't actually set yet, and they're not going to be launched on the ASX. It's going to be the CHEX, which is the smaller Australian shares market, which there's been some problems with getting them through regulatory ASX regulations. But this is a great first step. So people that expose themselves to ETFs with in Bitcoin and Ethereum on the Australian markets.
Yeah, very, very exciting. I mean, spot ETFs is something that the whole crypto community has been looking for years and years. And, we've got futures ETFs after futures ETFs getting launched, but it's not the real thing. And it means that a lot of businesses that want to own Bitcoin directly or Ethereum directly, but want to do it through regulated channels, can't invest in those things. So with a spot ETF like this, that's going to change, and of course, luckily, Australians are one of the first in the world to get it. Once this sort of thing starts to happen, though, in the States, I think we'll have large numbers of institutional investors flooding in, and that, of course, means big things for the price movements, but also for adoption as a store of value.
Absolutely. And I think, of course, with a lot of these sort of things where we've got small steps on, you just mentioned before, you said it quite well, people overestimate how big and quick things are going to move, but they underestimate in a bit longer of a time frame how big the shift will actually be. And these sort of first steps with spot ETFs or having that kind of exposure to Bitcoin, Ethereum, institutional exposure it's a great way for the world to start seeing how the system actually works. We were talking earlier, we got the SEC chairman talking about how it's actually going to be better than the current system, the banking system. And what you need to see a proof of concept. And this is the first steps of proving that these things actually work better than the current system. People are, we kind of have these trepidations of whether or not it's going to work. Or is it a scam? What if I lose it? Can it be hacked? Essentially, an abstract concept like Bitcoin needs to just be proved and shown through example. And then people start realizing that it actually is a better system. It is overall safer. It's more efficient. And you're going to make a lot more, I'm going to say, money out of it than with fiat currency because it's not inflationary. No one can just print it. It's completely decentralized. And as far as other cryptos go, any crypto that has a team that can change the fundamental coding behind the token or the blockchain itself is not decentralized, which is why I think Bitcoin stands head and shoulders above all others in that aspect of what it actually does.
Yeah, nailed it. And you could put a little damper in my segue here because I do want to talk about Ethereum. We are very Bitcoin centric, and I think it's important to recognize that when it comes to an investment vehicle or store of value for investment, Bitcoin is miles above everything else. But of course, trading other altcoins, there are digital purposes for other altcoins.
Of course, there are great
the biggest one being Ethereum, of course.
Yeah, and we were talking earlier about NFTs. Like Ethereum, essentially, that is the platform which NFTs are then the encryption is written off of. And so that's a very fundamental part of NFTs and what we're going to be seeing in the future as we move into that kind of a larger space and that actual use case for Ethereum. And of course,
that's right. Yeah. I mean, Ethereum continues to grow and even outgrowing Bitcoin in recent months. It's, and it's, no mistake. It's a chain that's heavily used and utilized. Ethereum balance on exchanges has plunged to a 3-year low. And this of course is a signal that people are buying up the Ethereum and moving it off the exchange because they want to hoard it and store it or use it in the future. That's a very bullish indicator, and if it's plunged to a 3-year low, it's good.
Yeah, I'm very much in the agreement that is quite a bullish sentiment. And I think right now we're seeing quite a market dip, and there's a lot of different reasons for why this has happened. I don't think a lot of people fully understand why it's dipped. I mean, remember there's some large institutions at play here, large exchanges which have the ability to move billions and billions of dollars worth of crypto on and off exchanges, and of course, there was news of the Omicron variant coming out, which unsettled markets. So we're seeing a lot of price movement right now, which I don't think is reflective of the actual price value of where Ethereum and Bitcoin are sitting. And things like this they're big bull flags for me. This is going to see the price at least moving in next couple of months. I think we'll see it stabilize and start pushing back up again. And of course, we've got there's some rumors that old Uncle Joe Biden's government is actually mining Bitcoin. I think they would be...
That's huge.
If it's true, they'd be remiss not to be. And you would hope that America is as smart and as powerful as they are. They'd have economists. I'm going to say they won't be Keynesian economics backgrounds, but I would hope that they have an open enough mind to see the value of Bitcoin, or at least think, you know what, we shouldn't miss out on this.
Yeah. I mean, it's as you said, the economists are probably Austrian founded, but I mean, it's also a play of game theory play. Look, let's get some of this just in case we're wrong. I don't think that the government necessarily is thinking, hey, Bitcoin to the moon. It's more a case of, look, there's a lot of hype around this thing, and we don't want other nation states to be able to have this economic weapon over us if it does turn out to be true. So let's mine some just in case. I think that's probably what's happening, if true. Of course, it is a rumor.
And like I was saying, though, I do think it would be remiss of them to not be mining. Same with most countries, even ones who are like India, who are coming out and saying, no, we're going to ban it, or okay, well, now we're going to regulate it. I would think you would be foolish to not have some sort of toe in the water on something like this. I was reading a really interesting article the other day, which talked about how the costs of Bitcoin, trying to ban Bitcoin, versus the costs of taking Bitcoin on and mining it. It now looks much more attractive to actually just accept it and mine it and see what happens, rather than try and regulate and ban it. Of course, in the Bitcoin standard, he talks about the different ways that governments could regulate or ban it, ways it could be taken down. And when you understand and look at the actual fundamentals of what it is, as far as not just the economics of it or the value as an asset, but the way it works as an encrypted fundamental system, I just think that a lot of countries are going to start looking at this, and their economics advisors are going to say, you know what? We can't really actually regulate this, and it's going to cost a lot of money, time, and energy to regulate something which is really sound.
Yeah, no, man. I love it when you go on these rants.
Thank you. Ranting is what I do best. Take us through the Satoshi Craig Wright 100 million. This is great.
Yeah, of course. So basically, Craig Wright, who's known to be this figure who's claimed to be Satoshi, I think a lot of the Bitcoin community sees through his nonsense and realized that he's faking it. He was there in the early days. He's taken up a whole bunch of court cases, and recently has been ordered to pay $100 million in damages. So the court has basically said, "Oh, you're Satoshi, are you? Oh, well then pay $100 million in damages, because Satoshi is liable for those damages." So it's kind of come back to bite him, which I found
him in the ass.
Yeah, it's karma coming back.
Yeah, he's quite an interesting guy. I think the whole story is quite funny in the way, he's claiming that he has access to these large wallets, and yet just never has proved it and never will prove it. Yeah, I think if you start talking and you're writing checks that your ass can't cash, this is what's going to happen. Talking of checks that your ass can't cash, my crypto wallet collapsed, the cryptocurrency exchange, and they've appointed liquidators to basically sort the whole mess out. And that's, I think it's going to see investors losing everything, and basically just because it's not regulated in the way that classical exchanges are with traditional stocks and asset classes.
Yeah, look, it's always sad when something like this happens, because it does mean that investors in crypto, which I always think of as my brothers and sisters, it means that they're losing money, which does suck. And it's on the back of storing their money on an exchange. And, the old adage is true. If you don't have the private keys, it's not your Bitcoin. So make sure that you get yourself a cold wallet. Make sure you learn how to use it correctly and store your Bitcoin off exchanges. Now, of course, you might have a smaller amount that you're either trading with, or maybe you've got it invested in some exchange where you're lending it, but you need to do that understanding full well that the risks are that these sort of wallets, these custodial wallets, can collapse. And that's exactly what happened here with my crypto wallet. It's not a good thing. It's I think it's a really bad thing for the space when this continues to happen. But, looking back for the last several years, we used to have a lot more of these, and we're getting less and less of them as the custody of crypto gets better and better. So it sucks, but it is what it is.
Yeah, and I mean, well said. Being a Melbourne-based exchange, ASIC is going to have an investigation into what happened, I imagine, and all of this sort of stuff's it's not going to look good on crypto essentially, but pure capitalism requires businesses to fail. The free market does need this to be healthy, and sometimes government regulation, which is argued quite extensively by some, David Graeber talks about this. We've got a lot of experts in economics who discuss whether or not government regulation is helpful or not. And essentially, when it allows businesses or companies which really shouldn't be able to continue trading, when it props them up with loans and handouts and regulates them in a different way to the average companies or investors, specifically I'm talking about banks here. So when banks get bailed out, like we saw in 2008, when that happens, you're holding up essentially, it's a false economy, for better words. You've got a company or a bank which really shouldn't continue with the current business that they've set up. The system's obviously failing for for many reasons. This My Crypto Wallet exchange has failed, and that's a healthy thing when it's failed because of poor leadership or poor systems or whatever they have in place that's caused this failure. It needs to fail.
I mean, at the end of the day, the good thing is that the last two articles here both point to adoption rising. We have a survey by Grayscale in the US that looks like 25% of US households are currently owning Bitcoin or other cryptos, I imagine. And the other one being that the Australian market is the same. Australians in 2020, 18.4% of them owned crypto. This year, that's up a whopping 10 or more than 10%. It's up to 28.8%. So that's more than a quarter of the population of Australia owning crypto. Huge.
Yeah, there's some good numbers to see that. And I think, of course, one of the reasons I think a lot of people are getting on this train is because of the hype. Just simply, they don't want to miss out. You've got stuff like Dogecoin and that Inu coin, all that sort of stuff, where people are jumping on, they're seeing these ridiculous gains, or at least hearing about these ridiculous gains. And the thing is, traditional investing, especially over the last couple of years, has been difficult for people, where we just went through a market crash. We're going through the ramifications of the COVID-19 pandemic and what it's doing to worldwide economics. And people are seeing that it is not as simple to keep making money through a market decline. And that's a natural order of things, which has cycled, every decade. Essentially, we sort of see that market crash, or at least some sort of drop in the overall market prices. But when people see these massive gains from crypto, they want to be a part of this. But it is the future. You're talking about the predominant change of money is going to be in the hands of millennials and the new generation, outside of the hands of the boomers. We don't quite have the bulk of the money yet. Essentially,
it's happened. It's coming.
That's it. The next couple of decades, we're going to transition, and this is going to be our future. This is our wealth because at the end of the day, humans can decide whatever currency we want to use. We can decide whatever stocks and that use, but the strongest sound money will always rise to the top, because as soon as something stronger comes out, people are going to see that slowly. They'll see the value of it because it just retains its strength.
Yeah, and of course, this is compounded by the network effect, where Bitcoin is already adopted. It's spades above every other one. because there's always one guy in a crowd that's going to be like, yeah, but Cardano can do more transactions.
No, it's just
it's not or Ripple is better. It's not going to change. You have adoption as one of the factors for this money, and of course, Bitcoin is that. Like,
they're not true decentralized cryptos.
Yeah.
They aren't. The people we saw when Ethereum had the hack. I can't actually remember what happened or who was behind it, but there was the hack, and they got into Ethereum and they changed the code, and it was basically essentially the person who did it just changed the code, so it wasn't theft. It changed the code, and then they ended up with like I think it was 100,000, whatever it is. They ended up with a large amount of Ethereum tokens, and they had the coders got in the background. They changed it. They corrected what happened, and it created a fork.
That's right. Ethereum Classic, right?
We got Ethereum Classic. But essentially, what that means is, though, it can be manipulated and changed anytime it wants, just like what we can do right now with fiat currency.
Yeah.
And that's
I reckon, a good spot to leave it, man.
That's it, man.
So thanks to all the listeners for tuning in to another episode of All Time High. And I'm out. Swarty, any last words?
Don't be afraid of prices as they change. If you're in Bitcoin for the long hold, then hold. Don't panic.
Good advice coming from the master. All right. Thanks so much for tuning in. Peace out.
Bye.